All right, welcome to The Explainer. Today, we are chasing the money from a pretty tense political summit in Alaska all the way to the booming skyscrapers of Dubai. Now, I know it sounds a little far-fetched, but the data shows a direct line connecting these global power plays to the price of your property. So let's dive in and break it all down. Here's how we're going to connect the dots today. First, we're going to trace that ripple effect all the way from Alaska to Dubai. Then, we'll dig into the specific political stalemate that actually became an engine for global uncertainty. From there, we'll see exactly why Dubai emerged as the world's safe harbor, figure out who's behind this flood of capital, and finally, look at what the new playbook for real estate needs to be in this kind of environment. Okay, so let's get right into it. The central mystery here, it's a connection that honestly spans continents, and at first glance seems to defy all logic. I mean, just think about it. How can one handshake, a single high-stakes diplomatic meeting in the remote chill of Alaska somehow trigger a massive, record-shattering real estate boom 6,000 miles away in the sunny deserts of Dubai? It just seems totally disconnected, right? But as you're about to see, the link is not only direct, it's incredibly powerful, and it completely reshapes how we need to think about global capital. So what was the trigger? Well, the key here, and this is super important, wasn't about what the summit achieved. It was all about what it didn't achieve. That specific outcome became the engine driving this entire phenomenon. Okay, so to really get this, we need to understand a concept called a productive stalemate. Now, this doesn't mean the talks were a failure. Not at all. It's a very specific kind of outcome where, yeah, the leaders talk, they avoid a big public meltdown, but nothing fundamentally changes. The really big issues, things like sanctions, core conflicts, they're all just left right there on the table. So if you look at it, on the surface, everything looked pretty good, right? You had productive dialogue, some de-escalation optics. It gave the markets a little sigh of relief. But the reality was that nothing was actually resolved. No concrete deal was signed, no sanctions were lifted. And this created the perfect storm. You had the appearance of stability, but with all the underlying risks still firmly in place. That sustained uncertainty, that is the real story here. And honestly, this quote from the source material just nails it. The stalemate sent a crystal clear signal to global investors. The world isn't getting any less risky anytime soon. So, if you're a high net worth individual, this outcome is a giant flashing sign telling you it's time to protect your assets, to find a safe place for your wealth. And that brings us right to Dubai's doorstep. With all this global uncertainty becoming the new normal, capital started a frantic search for safety. And one city stood out as the world's #1 safe harbor. Just think about it for a second. All of this, what we'll call anxious wealth, it needs somewhere to go. It needs a financial vault, a place that's stable, secure, and this is key, politically neutral. And Dubai has strategically positioned itself to be exactly that place, acting like a powerful magnet for any capital that's trying to flee risk. And believe me, the results of this capital flight, they are absolutely staggering. Let's just run through the numbers. First off, property sales prices just skyrocketed, jumping an average of 18 to 20% in a single year. That's not just growth, that's an explosion in value that outpaces pretty much every other major market on the planet. And look, this wasn't just prices going up. The market itself was just on fire. In only the first 3 months of 2025, we're talking over 42,000 property sales. That's almost 500 transactions every single day. It shows this wasn't just a handful of billionaires. This was a deep, frenetic market with buyers absolutely flooding in. But the high end of the market? Oh, that was even more dramatic. In that same quarter, a massive $2.6 billion was spent on luxury homes alone. We're talking properties over $10 million. This is where you really see the sheer scale of that high net worth capital pouring into the city, looking for a safe place to park huge sums of money. Okay, whoa, let's just take a breath for a second and break this down. It's not just sales prices that are soaring, rental rates are right there with them. office occupancy is over 92%, which is just incredibly healthy. But the number that really jumps out to investors, it's that gross rental yield, 6.7 to 8%. That is a powerful, powerful return in any global market today.
So you got to understand, this boom is no accident. It's not a fluke. It is built rock solid on these 4 pillars. Dubai's strategic neutrality is absolutely key. Then you add in a pro-investor framework with things like golden visas and zero taxes. You throw in full foreign ownership and a long history of being a reliable safe haven during global crises. Well, that's a seriously powerful combination.
Okay, so we've covered the why. We know why all this money is flowing to Dubai. But to really, truly understand this market, we need to look at who is investing. And it turns out there are 2 very different yet weirdly complementary streams of capital that are all converging on the same city. And this brings us to the 2 very distinct mindsets that are driving this whole boom. On one side, you have Russian investors. Their money is what the source calls refugee capital. It's driven by a fear of sanctions, and it's simply looking for safety. On the other side, you have American investors bringing opportunity capital. They're driven by those high rental yields and a stable currency, and they're chasing growth. It's incredible, really. Dubai's market is one of the few places in the world that perfectly caters to both motivations at the exact same time: fear and greed. But here's the thing, it's not just a 2-country story, not by a long shot. The demand is unbelievably global. Indian and British buyers actually lead the pack, with huge investment also coming in from China and Saudi Arabia. This diversity is a major sign of the market's fundamental strength. And if you really want to grasp the sheer impact of that refugee capital, just look at this number, $6.3 billion. That's the estimated investment from Russian nationals just since 2022. It is a tidal wave of money that has had a massive, massive effect on the luxury sector. So, after all that, what's the big takeaway? What does this all mean? Well, it means the old rules, they just don't apply anymore. This new global reality of constant uncertainty, it demands a completely new real estate playbook. What this really boils down to is that your modern real estate client isn't the person down the street anymore. They are global, they are incredibly sophisticated, and they are absolutely digital first. The traditional local brokerage models, they just can't keep up. So the new mandate really is to modernize, and it all comes down to 2 simple steps. First, achieving global reach. This isn't just about broad advertising. It's about speaking to each motivation. A digital campaign for refugee capital has to emphasize security and asset protection, while one for opportunity capital needs to highlight the hard data on yields. Second, you need seamless service, using automation to engage these global leads instantly, no matter what their time zone is. And that, brings us to our final thought here. The Alaska Summit wasn't just some isolated event. It was a symbol of our entire era. It solidified a world of sustained, low-grade tension. In this world, the flight to safety and quality isn't just a trend, it's a permanent feature of the global economy. The real question is, as these dynamics continue to play out, where will all that anxious capital decide to go next?